Are you thinking about buying a home or selling a home in Dallas, Texas? Then you're going to want to hear this. The real estate market is shifting and mortgage rates are starting to drop, but there's more to the story. Today, I'm breaking down the latest trends in the Dallas-Fort Worth area, showing you why this could be the perfect time for you to make your move. Stay tuned for everything you need to know to get ahead in this market. But before I do that, I'm Kenneth Holland with eXp Realty. Call me for all of your real estate needs. Let's begin with mortgage rates because they're a huge factor affecting both buyers and sellers. As of September 2024, the average 30-year fixed rate is 6.23%. While that's down from the peak of 8.03% last year, it's still above the recent low of 6.11%, with rates coming down over the past 5 months. We've seen a huge jump in refinancing. But what's interesting is that home buyer demand hasn't picked up as expected. You'd think lower rates would fuel more buying, but the market is responding slower than usual. Buyers might be waiting for rates to drop further after post-election results. It's a tricky situation. Now let's talk about home prices. According to Case-Shiller Index, we saw a modest 0.18% month-over-month increase in July, keeping up with the 0.6% growth we've seen over the last 3 months. That's an annual growth rate of about 2.5%. In short, prices are rising, but at a much slower pace compared to the 47% surge we saw between 2020 and 2023. But here's the important part. This slowdown is expected after such rapid growth. When we look at different cities across the country, there's a huge divergence. Cities like Los Angeles and Seattle are bouncing back quickly, while places like Portland and Phoenix are still struggling to hit their 2022 peaks. So if you're in the Dallas market, it's important to know that while we're seeing steady growth, different cities are experiencing different trends. The FHFA index shows similar trends. National home prices rose just 0.1% month over month in June. While it may seem like a slow progress, it's still moving in the right direction, especially after months of stagnation. What's particularly interesting is that prices have plateaued over the last 5 months. Now let's focus on new home sales, which have been strong lately. Even though there was a 4% month over month drop in August, that's coming off a very strong July. Year over year, sales are up 10%, and that's a much more important figure. The annualized 716,000 homes, new home sales in August are solid, but they're still not enough to address the housing shortage we're seeing across the country. Now, about pricing. In August, the median price for new homes was $427,000, down 5% year over year. But before you think prices are dropping fast, this is mostly due to a mix issue. About 64% of the new home sales happened in the lower priced South, and nearly 70% of all sales were under $500,000. So it's less about felling prices and more about homes are selling. Pending home sales, which measured signed contracts for existing homes, rose by 0.6% in August. While it's nice to see some growth, the numbers are still lower than we expected given the rate drops. The index is 4% lower where it was in October 2023, even though mortgage rates have fallen 1.3% since then. This is unusual because typically when rates drop, pending sales pick up, but buyers may be waiting to see if rates drop further or trying to avoid buy-side commissions after the NAR settlement. Speaking of rates, it's not as simple as just following the Fed. While the Fed has cut rates by 50 basis points, mortgage rates have actually ticked up 11 basis points in that time. This might seem confusing, but it's common. The market often prices its rate cuts well before they happen. So we're not always seeing an immediate drop in mortgage rates after the Fed makes its move. Here's something interesting. Nearly 48% of U.S. listings have been on the market for 60 days or more. That's the highest percentage of stale listing prices since 2019. If you're a buyer, this could mean more negotiating power, especially for homes that have been sitting on the market. For sellers, this highlights the importance of pricing your home competitively from the start. Now let's focus on what all this means for Dallas-Fort Worth specifically. Dallas is part of the southern region where we're seeing more affordable homes compared to the national average. While prices here are still competitive, we haven't seen the dramatic swings that cities like Los Angeles or Seattle have experienced. This makes our market a bit more stable, which is great for both buyers and sellers. So what does all of this mean for you? If you're a buyer, now is a great time to get pre-approved and start shopping for homes, especially if you're eyeing properties that have been on the market for a while. With mortgage rates stabilizing, you may be able to lock in a good rate before they rise again. For sellers, it's still a strong market. Homes that are priced right and well presented will attract buyers, especially with fewer new listings hitting the market. Make sure your home stands out and don't be afraid to adjust your price if it's been sitting for a while. In summary, the Dallas-Fort Worth market remains strong and steady with a balanced mix of price stability demand. Whether you're buying or selling, it's important to keep up with these trends so that you can make the best decision. As always, I'm here to help guide you through the real estate process. Feel free to call me or text me or email me. You can call me or text me at 469-200-0253. Remember, I'm Kenneth Holland with eXp Realty.